Hi, this is Monica. Happy New Year, everybody. I'm here today with Paul Soule from Coldwell Banker Home Loans. Paul, thank you for being here today.
You're welcome.
Wanted to talk a little bit about condominium financing in 2010, and Paul here is our local expert. Paul, where do you see the availability of funds heading for money availability in 2010
For condominiums?
for condominiums?
Condominiums are kind of a unique thing in that Fannie Mae and Freddie Mac look at them a little bit differently than they look at single-family homes. And they've tightened up their guidelines on condominiums quite a bit in the last couple of years. We don't consider it a bad thing. We think it's probably a good thing because we're looking at the whole financial picture of the condominiums to make sure that they're acceptable to Fannie Mae and Freddie Mac. And we make them acceptable to Fannie Mae and Freddie Mac, the customer, when they buy them, is going to have what they know is a financially stable condominium that they're buying into. So we know that's not a bad thing. There are some condominiums out there that aren't going to meet requirements, but we work with the customer, we work with the condominium associations. We try and tell them if there's an issue, what the issue is up front. It usually takes a couple weeks to make sure that we know the condominium's okay, or sometimes we already have a list of condominiums that have been approved.
And that's why it's so important to work with somebody like Paul who's experienced in the condominium market so they know what they're getting into from the beginning.
Absolutely. Condominiums are a slippery slope. There's so many things that we see that other lenders may miss. We know about locally about flood insurance, master policies for insurance, what is required in the budgets and the financials. That's some of the most important things that we're looking at.
Okay. Where do you see rates going in 2010, or at least the initial portion of the year?
Well, what we're seeing with interest rates is obviously the rates have been low for a long time. I don't want to say that they've been artificially low, but they've been historically low for a long time. And it's the old adage of what goes up must go down, and what goes up must come down, what goes down must come up. In this case, with interest rates, we're going to see a rise in interest rates this year. I don't think it's going to be, catastrophic or astronomical. I don't think we're going to see 7% interest rates. But we're predicting they'll be somewhere in the 5.5% to 6% range.
Still cheap, affordable money.
Good money.
No question, no question. Paul, thank you so much for being with us today.
You're
I
welcome.
appreciate it. See you later from Ocean City, guys. Bye.